Hey everyone, I have an update to my top stock to avoid in 2024. I highlighted that Chegg was one investment I wanted investors to avoid in 2024 because of its awful prospects in relation to how it's being devastated by the impacts of ChatGPT. So I'm going to make an update to that recommendation here. You're going to want to tune in to see what that is, and I'm going to share with you why I'm making an update to this recommendation. So, as you might already be aware, if you're the worst stock to buy, if you're ranked on as my worst, you can only improve from there, right? So you can understand I'm upgrading Chegg here, and I'm going to share with you why that's the case. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Chegg stock has already fallen 74.74% year to date. So if you heeded my rating or recommendation to avoid this stock, you will have saved tremendous sums of money here on your investment, as the stock is down 74% while the S&P 500 broad market index is up more than double digits on the year. So what am I changing this recommendation to? Well, I'm taking it off my ranking as the worst stock in 2024. I'm upgrading it now to just a sell rating, and it's no longer the worst of those stocks that I have rated as a sell. And the reason why I'm upgrading this stock is because finally management has come to its senses and thrown in the towel and said, we're not going to compete with ChatGPT. They have devastated our business. We're going to take a different route. And let me share with you that. All right, so management announced a restructuring plan, and here are the details of the restructuring. Now, one of the areas they're going to focus on is students with a comprehensive course load who are seeking positive learning outcomes and holistic support. What that means is they're looking to focus on students that are full-time students, comprehensive course load. That means, taking 4, 5, 6 classes every semester, and they want full holistic support, right? They need more help because they're taking more classes. So I like that switch, right? Because if you're going to go after customers that still want to pay for help with their college studies, then you're going to want to go after those students that are taking the most classes, because those are the ones that are going to need the most help, right? And the way ChatGPT really disrupted Chegg's business is Chegg was charging a monthly fee between $14.99 a month and $20 a month to answer student questions to help students learn. But ChatGPT offers very similar answers to student questions, and they do it for free. So that's why I've suggested to avoid Chegg, because the whole business model was disrupted by the launch of ChatGPT and the fact that students can get similar help for free, and arguably better, right? In most cases for free. And so I've suggested that Chegg needs to really change tact here, because they're under significant competitive disadvantage. So finally, they're doing that, right? Additionally, they're going to reduce their global headcount by 23% to become leaner, more efficient organization, speed the innovation, and aligning expenses with near-term revenue trends. And you can ignore the first reasons, right? It's not so that they can become more efficient or leaner or increase the speed of innovation. It's because you need to align your expenses with your revenue. If your revenue is falling, you want to bring down your expenses below that. That's the primary reason why Chegg needs to reduce its headcount. And I've been calling for this all year long, and even longer than that. Even in 2023, I had suggested Chegg really needs to shrink and cut down costs, because its revenue is going to start falling. Revenue growth is certainly going to start falling. And finally, they did this finally. And I think the 23% is just the start. I think they need to slash more. And I think over the coming months, or maybe the coming quarters, we'll see more, because 23% I don't think is going to be enough. Additionally, they're going to focus more on international students. And I like that focus. International students, especially in regions where they don't have access to large language models that helps with their studies, those students may still be willing to pay for services. That's an encouraging sign there. And then they want to diversify their distribution channels, including direct to educational institutions. That's an area I feel that could work. Uh, Up until now, Chegg had been mostly outside of educational institutions. Educational institutions had a sort of mixed relationship with Chegg because they complained that students use Chegg to cheat on their homework. And if Chegg can bring itself more aligned with university interests, then I think they can develop relationships there and integrate themselves. If you didn't already know, I'm a professor at a university and we use a content management system. If Chegg can get itself embedded into the content management system of the university, I think that could provide access to students and give it an advantage over ChatGPT, which may not be able to integrate itself into university content management systems. So I like this shift in strategy here. And then they're going to execute new brand and marketing strategy, reaching out to students in high school and earlier in college. And I have mixed feelings about this. I'll give them the benefit of the doubt and see what they're going to do with that strategy. And then they want to simplify systems and processes using partners to leverage best-in-class software applications that are not core to our business. So basically looking at other monetization opportunities where right now it's not the core of the business. And that's really what they have to do. The core of the business is what's under threat. That's what ChatGPT is threatening, the core of its business. So it needs to find, it does some other things, right? It does offer some professional learning, some licensing, and I think that professional education segment might benefit here. They may need to focus a little bit more in that area. So something outside of the core is what they need to focus on and really shrink, because their business is going to shrink as a result of ChatGPT. And so I like the focus on reducing headcount, cutting costs, and taking a different focus here, because up until now I hadn't seen that. Let me share with you the recent quarter. So in the press release just on April 29th, they were talking about, they're seeing encouraging signs of their new AI-enabled platform and how it's working for students. So they were still trying to do something with AI to compete with ChatGPT, to have students use their own AI, and talking about, we had a productive first quarter rolling out AI-enabled services that will strengthen our product market fit. The investments we're making in our new product are designed to increase value to students and enhance the learning experience and expand the audiences we can serve. So not really seeing too much here in terms of how they're going to shrink and, really cut down their size and adjust to what's happened with ChatGPT. And then they went on to say they're seeing encouraging trends. Retention rate is solid. Learning experience looks good. In the first quarter, we had not over 9 million questions asked compared to 3.9 million questions. And so they were still trying to frame themselves as, it's, ChatGPT is there, but, we're doing good still, like trying to say that they're okay, that ChatGPT is not going to crush their business. And I wasn't happy with that, right? As an investor, as somebody who's making videos and discussing stocks and stock market trends, I felt management wasn't really facing the situation and giving investors a transparent view of the real difficulty underneath, the real difficulty as a result of ChatGPT. The devastations are much larger than the management team has been letting on. And today, or as this restructuring came out, was really the first sign that I saw of Chegg really taking notice and taking heed and just coming clean to investors and saying, look, we need to shrink. We need to do something different because ChatGPT has really crushed our business. And so finally, I'm starting to see that. And that's why I took Chegg off my ranking of the worst stock to buy in 2024. I would still suggest, avoiding this stock. I still have it rated as a sell, but it's not the worst of the worst anymore because management is finally taking the right steps, in my opinion. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.